And all these people are going to speak before we get to questions and answers. I'd like to also salute on the first rung the other people who are representatives either of FINMA, BNS, the banks that are also present, as well as the federal administration, and they will be at your disposal to answer any of your questions. I'd like to hand over straight away to the President of the Confederation. Thank you very much to all of you, ladies and gentlemen. The Federal Council gathered today during an extraordinary session to talk about the situation relating to Credit Suisse, and it's the fourth session of the government over the last 4 days. 3 of them were, in fact, particularly looking at this subject. The situation is well known. Credit Suisse is part of the 30 banks, systemic banks at a worldwide level, and one of the 2 major banks within the country. And its destiny, therefore, is not just solely decisive for Switzerland, for our companies and for private clients and for its own employees, but also it relates to the stability of the whole of the financial system. The situation with regard to Credit Suisse has been a source of concern over the past few months, which is why the Federal Council decided in the past few months to look at this and to do so in close contact with FINMA and the Swiss National Bank. Over the past few days, there's been turbulence in a number of exchanges, and which have destabilized the most fragile banks. That was the case for Credit Suisse. Despite its good capitalization, Credit Suisse lost confidence as far as the markets was concerned. And after such a loss of confidence, and to ensure liquidity of a bank is part of the measures that we have to take. First of all, in order to guarantee liquidity, the Federal Council took some decisions on Thursday night already, and those decisions were into operation at 8 o'clock, which ensure liquidity through the BNS by a second tranche of 50 billion francs, and its liquidity that Credit Suisse were able to mobilize from Friday. The first decision that was made, as far as this was concerned. Second decision was also taken on Thursday night, and it was a question of a guarantee, supplementary liquidity of 100 billion francs, and that particular guarantee was guaranteed by the Confederation. Of course, you can imagine that that particular element was, of course, one of the aspects that we talked about with the delegation from Parliament. As apart from liquidity, we also worked on various scenarios. And these scenarios had already been discussed by the Federal Council during the year. And on Friday, we realized that the sources of liquidity and volatility of the markets demonstrated that the necessary confidence could no longer be restored, and that a rapid solution, guarantor of stability, was indispensable. And that particular solution, which is going to be introduced to you tonight, is, in fact, Credit Suisse will be taken over by UBS. And this solution, in fact, which decided upon was after a few meetings with the Swiss National Banks and with the regulator, FINMA, with Credit Suisse, and also with UBS. And the Federal Council salutes this and also supports it by guaranteeing the necessary framework conditions to ensure its success.
Liquidity outflows and market volatility showed that it was no longer possible to restore the necessary confidence, and that a swift and stabilizing solution was absolutely necessary. And this solution is the takeover of Credit Suisse by UBS. It is supported by the Federal Council following several meetings with the Swiss National Bank, with our regulator, the FINMA, with Credit Suisse and UBS. And the Federal Council welcomes this takeover and is supporting it by guaranteeing the framework conditions necessary for its success. Mesdames et messieurs, c'est une annonce, nous en sommes conscients, d'une très grande portée. C'est une annonce d'une très grande portée, bien sûr pour les 2 banques concernées. C'est également une annonce d'une très grande portée pour la stabilité de la place financière suisse. C'est une annonce de très grande portée pour les privés, les entreprises qui ont besoin de ces liquidités et de l'accès au système bancaire. C'est évidemment aussi une annonce d'une très grande portée pour la stabilité de la place financière internationale. Une chute incontrôlée de Credit Suisse conduirait à des conséquences incalculables pour le
weren't to
pays
be
et pour la
controlled,
place
then that
financière
would give rise
internationale.
to
Nous avons donc la
incalculable
responsabilité de tout
results for the
faire
country.
pour éviter
So we're
une crise
responsible. We want to
financière de
do
grande
our
ampleur.
utmost in order to
Le
avoid
Conseil
a
fédéral, dans ces
major
conditions,
financial
est
crisis.
convaincu
So the
que dans
Federal
cette
Council
situation
is
difficile,
absolutely convinced
la
under
reprise du
this
Credit Suisse par
situation, which is
l'UBS est la
difficult.
meilleure solution
UBS
pour
taking
rétablir
over
la
Credit Suisse is the
confiance
best
qui a
solution in
manqué
order to
ces
be able to
derniers temps sur les
reestablish
marchés
the
financiers et
trust that
contrôler au mieux les
lacked
risques pour notre
on the
pays
financial
et
markets
sa
in the
population.
past.
The Federal Council is therefore confident that in this difficult situation, the takeover of Credit Suisse by UBS is the best solution for restoring the confidence that has been lacking in financial markets recently, and for best managing the risk to our country and its citizens. Thank you very much.
Merci, Monsieur le Président de la Confédération. Madame la Conseillère
Thank you, President of the Confederation.
Many thanks, Vice Chancellor, Federal President. Ladies and gentlemen, I thank the Federal President for his introductory remarks. He made clear what the decision is all about that the Federal Council has had to take over the past few days. Our objective was to safeguard the interests of Switzerland, and it was about making a contribution towards stabilizing the international financial markets and to protect the financial arena of Switzerland as well as protecting our economy. A collapse of CS would have had detrimental repercussions on Switzerland and other countries. Over the past weeks and months, the Financial Department, in close cooperation with the Federal Council, together with the regulator, looked at the situation on the financial market in Switzerland. Last Wednesday, on the 15th of March, then based on the turbulent developments in the market, it became clear that the liquidity of Credit Suisse was no longer secured. In coordination with the Financial Department, FINMA and SNB on Wednesday evening reacted to the uncertainties in the market, and SNB made it clear then that it would cover liquidity of a CS in case of a default, and to guarantee liquidity in the long term, legal requirements were necessary in order to make available the required instruments. The Federal Council therefore took two decisions. First of all, last Thursday, on the 16th of March, it decided to create the legal basis required for the Swiss National Bank to make available additional liquidity. You heard earlier that the French National Bank has guaranteed the emergency liquidity instrument. It's a tool that is available in other countries too. However, with this regulation by the Federal Council, we extended this possibility to make sure that the National Bank was able to provide additional liquidity. We did this on Thursday, and it also entered into force on Thursday. The second measure that we decided upon on Thursday night is the fact that the SNB, over and above that, then will give a default guarantee for liquidity loans to the tune of 100 billion Swiss francs, and I'm going to come back to this later. This is something else that we decided upon on Thursday. In order to guarantee liquidity, we implemented work towards achieving a sustainable solution, and on the 15th of March, on Wednesday afternoon, we made a number of decisions, and in the subsequent hours and days, the negotiations were accelerated. The Federal Council was kept up to date. The Federal President said earlier that we had 4 meetings in 4 days, and daily we were able to be brought up to speed on the current situation. And I also had daily exchanges with colleagues abroad, colleagues Janet Callan from the United States, as well as Jeremy Hunt in the UK. And both financial centers are important financial hubs the USA and the UK, and therefore play a very important role. Today, the negotiations between UBS and CS were concluded successfully, and to bring about a solution was the objective of the Federal Council. Is a solid solution which the Federal Council welcomes, and it is suitable to stabilize the situation of CS and also to give the required guarantees to the financial markets. For this merger to come to fruition, additional decisions were required, which we made today. The Federal Council made available a guarantee to the tune of 9 billion francs in order to cover any risks and reduce them for UBS. This is about potential defaults and losses based on a specific portfolio, which the UBS will take over as part of the deal. This guarantee will only come into effect if losses of the UBS exceed a certain threshold. It's like a backstop, an insurance which only comes into effect if certain losses were occurred, and UBS first of all would cover those losses, and then in the second instance the federal government would cover those losses and make available this guarantee. Ladies and gentlemen, please allow me further additional comments on the decisions taken by the Federal Council as early as Thursday in order to guarantee liquidity. These decisions were necessary and consistent in order to re-establish confidence of the market. In the liquidity loans of the SNB to cover losses are tied to certain caveats in order to reduce the loss risk for the government and for USB. And this also includes a risk premium which the bank has to pay on those loans. And the president of the National Bank is going to give additional explanations to explain this instrument. This liquidity support is an internationally acknowledged instrument. It's the public liquidity backstop, as we call it. And this tool is also used in other financial centers, not in Switzerland to date. And the Federal Council, as early as 1 year ago, decided to make available this tool in Switzerland too. And the draft legislation was available and was to be decided upon over the coming months. Since the situation became urgent, this new legislation and instrument and tool was introduced for this specific situation. This is an emergency entitlement based on Article 84, paragraph 3, and Article 185, paragraph 3, which was passed. This emergency measure is time-limited, i.e. it needs to be superseded by ordinary legislation, and this is meant to be done over the next 6 months, and a draft piece of legislation is going to be tabled. For the financial support, there is a credit required by the federal government. This covers the loss guarantee, the backstop for the liquidity for SNB, the guarantee vis-à-vis SNB, and the limitation of losses. And this requires the approval of the financial delegation of the Federal Councils. And the financial delegation this afternoon agreed to both backstops, and I would like to thank both delegations on behalf of the Federal Council. I'm sure you will have questions on the technical details on the Federal Council's decisions, and we will be able to answer these questions. And State Secretary Stoffel is present, and also the Director of the Financial Administration is present. I would like to thank all of those involved internally and all of those who are sitting here at the top table, who have been working day and night to bring about this favorable solution. And I'd like to conclude my remarks. The Federal Council regrets that CS was unable to master its own difficulties. That would have been the best solution. and we regret this because many thousand employees are going to be affected, but we are convinced that the employer is going to give them some certainty as quickly as possible, and that's our expectation, that we know what's going to happen. The Federal Council also regrets and deplores that the bank, which used to be a showcase for Switzerland and part of our strong economy, ended up in this situation. Credit Suisse still has many solid parts of the business. It's got a very good workforce, and especially it is a well-recognized Swiss bank, but unfortunately the loss of the confidence of the markets and of the clients was something that we were unable to stop. By the takeover by UBS, we want to restore this confidence, and the takeover by UBS from the point of view of the Federal Council is the best solution possible, but this solution is also tied to risks. The risks for the government and for the taxpayers, for the financial hub, the economy, for our country as a whole, but also for the international financial stability is a lot lower than in any other scenario. Let me repeat. The failure of a systemic relevant bank would have had severe repercussions globally and in Switzerland, and Switzerland needs to be aware of its own responsibility beyond its own borders. The Federal Council is convinced that the takeover of Credit Suisse by UBS is creating a basis for more stability both in Switzerland as well as internationally.
Important bank would have caused irreparable economic turmoil in Switzerland and throughout the world. For this reason, Switzerland had to take the responsibilities beyond its own borders. These efforts have paid off. The Federal Council is convinced that UBS takeover of Credit Suisse has laid the foundations for greater stability both in Switzerland and internationally. Ich danke Ihnen.
Merci, Madame la conseillère fédérale. J'ai le plaisir de passer la parole au Monsieur Thomas Jordan, le président de la Direction générale de la BMS.
Besten Dank, Herr Vizekanzler, Herr Bundespräsident, Frau Bundesrätin, meine sehr verehrten Damen und Herren.
Vice Chancellor, Federal Chancellor, ladies and gentlemen. The role of the National Bank for this international hub and financial hub and the Swiss economy. Let me go into detail. The cause of this crisis, I would like to summarize from our point of view. Since last week, we've been in a very extraordinary situation with the current U.S. banking crisis and the crisis and loss in the confidence in Switzerland was increased. This has had repercussions on the liquidity of the bank. Therefore, the Swiss National Bank, as of the 15th of March, it gave a liquidity to Credit Suisse to a very high tune in order to contribute to stabilizing the situation. An important share of this liquidity was in foreign exchange. This liquidity bailout created the time frame required in order to give Credit Suisse some breathing space. It was vital in order to guarantee the liquidity of Credit Suisse in order to find a stabilizing solution, targeting the reason for the loss in confidence. A collapse of Credit Suisse would have had serious repercussions for national and international financial stability as well as for the Swiss economy. Over the past few days, with joint forces by FINMA, SNB, the federal government and both banks, a sustainable solution for the future could be found. To report a successful implementation of the takeover announced today, the National Bank is now going to make available comprehensive liquidity, which can be drawn as needed. And let me explain this briefly. Both banks have unlimited access to the existing facilities of SNB, which is provided by monetary instruments. Over and above that, and based on the emergency regulations of the Federal Council, Credit Suisse and UBS have a liquidity loan to the tune of overall up to 100 billion Swiss francs. In addition, and based on the emergency regulations of the Federal Council to the National Bank of Credit Suisse, this is connected to a liquidity loan to the tune of 1 billion Swiss francs. The exact details of the loan is based on the public liquidity backstop, and this is something that the Federal Council decided as early as 2022. The new financial instruments, the public liquidity backstop, corresponds to the international standard. The Financial Stability Board explicitly approved this as part of the framework in order to guarantee to avoid the collapse of a potentially systemically important bank. It was indispensable that we acted quickly and found a solution as quickly as possible. Credit Suisse, based on its size and its global operations, is considered a systemically relevant bank. And this means that in case of its collapse, this could lead to financial repercussions globally and therefore also be very detrimental to the reputation of Switzerland. This reputation is vital for the wealth management business of the Swiss banking sector, as well as for its economy. The current solution provides that the system-relevant functions are being maintained, and this is access of households and SMEs on their deposits, as well as the ability to draw on open credit facilities and also to roll matured credits. It's about making liquidity available to the Swiss economy. Against this background, measures were to be taken in order to avoid contagion and the collapse of a systemically relevant bank and to decrease the repercussions on the public. Through providing liquidity, it is ensured that both banks have the required liquidity. The National Bank, by giving a liquidity bailout, meets its mandate to contribute to the stability of the banking sector, and it cooperates with the Federal Council and the FINMA.
Thank you very much. And now the chairman of FINMA, Marlene Amstadt.
Vice Chancellor, Federal President, and everybody on the top table, ladies and gentlemen. Today, thanks to a joint effort of the authorities and the two large banks, we were able to bring about sustainable solution to an acute and very serious problem. This is a very important step, which is to protect the depositors as well as the reputation of Switzerland as a financial hub. As of October 2022, the social media triggered rumors on massive outflows from Credit Suisse by its clients. Nevertheless, the bank still met the regulatory minimum requirements, both with regard to its capital as well as with a view to its capital. Thanks to the high security buffer by the regulator, and since the increased buffer because of the too big to fail buffer, the bank was able to absorb those unusually high outflows, despite the fact that the financial data was viable. There was a huge loss of confidence in the clients with regard to its futures. The recent banking crisis in the USA, as well as the general financial crisis, again increased the market reaction. It started a downward spiral, which then was reflected in the share price of CS. The too big to fail regulations are based on solvency buffers, i.e. solvency buffers were able to absorb those real shocks. However, the loss of confidence and the resulting problems were too large, and therefore the authorities had to take measures. It is clear that FINMA is going to accompany the process of the takeover and offer oversight, as well as it has been overseeing the recent talks, and will make sure that all legal requirements are met. It is also clear that the requirements The requirements will increase because the bank has become a lot larger. First of all, it's about the takeover conditions. It is important that the banking business of CS is still going to function on Monday. The protection of the depositors is being maintained. The deposits and accounts and other services will remain accessible as usual. It is clear that the player on the Swiss financial market, the federal authorities and FINMA need the banks and need to be able to find solutions in order to meet crises and overcome those. The solution that was presented today, i.e. takeover of CS by UBS, together with stabilizing measures by the federal government as well as SNB with regard to liquidity, as well as the 81 capital instruments, equity required by FINMA, gives stability for the clients of the bank, for the financial hub, as well as the financial markets in general.
Mr. Chairman,
thank you very much, Madam.
You have the floor.
Dear Vice-Chancellor, dear President of the Swiss Confederation Alain Berset, dear Federal Councillor Keller Suter, Chairman Thomas Jordan, Chair Amstadt, dear Axel, ladies and gentlemen. I am pleased to be here today as we announce this integration, one that reinforces Switzerland as a leading global financial centre. Bringing UBS and Credit Suisse together will build on the best skills available in the Swiss financial centre and enhance the combined organisation's ability to serve our clients and deepen our best-in-class capabilities. In realising the enormous opportunities this deal represents, we are also aware of the need to support the broader Swiss economy and our clients at a time when macroeconomic uncertainty makes business conditions challenging and unpredictable. I am grateful for the strong support of the Swiss Federal Council, the Federal Department of Finance, FINMA and the Swiss National Bank, who initiated the discussions. We have agreed a framework of support with the Swiss regulators which ensures a successful integration in the best interests of Switzerland and protects our shareholders. I would like to thank the authorities for their close collaboration during this process and will continue to work with them as the integration progresses. The combination of the two banks further strengthens UBS's position as a leading global wealth manager with more than $5 trillion in total invested assets operating in the most attractive growth markets. It will also reinforce UBS's position as the leading universal bank in Switzerland and further extend our position as the most important Swiss global bank. Having been Chief Financial Officer during the last global financial crisis, I'm well aware of the importance of a solid balance sheet, especially in challenging times like these, and UBS will remain rock solid. This transaction confirms and augments our strategy of growing our capital-light businesses. Let me be very specific on this. UBS intends to downsize Credit Suisse's investment banking business and align it with our conservative risk culture. It is intended that the combined investment banking businesses will over time account for no more than 25% of the group's risk-weighted assets. UBS's strength and our familiarity with Credit Suisse's business puts us in a unique position to execute this integration efficiently and effectively with Swiss and international clients' best interest in mind. Ralph Hammers will be the Group CEO of the combined entity, and I will continue in my role as chairman. This transaction supports financial stability in Switzerland and creates significant sustainable value for UBS shareholders. Combining the best of Credit Suisse with our strategy and culture will help these businesses flourish. We will provide updates as the integration progresses. In the meantime, we will focus on serving our clients at both institutions. I am pleased that this transaction will bring the long-desired stability for the Credit Suisse client base. We're well aware that in the coming weeks and months will be difficult for many, especially for the employees. Let me reassure you that we will do our utmost to keep this time of uncertainty as short as possible. Let me close by thanking all parties involved for the incredibly hard work and excellent collaboration over the past days. At the same time, I would like to extend a very warm welcome to all our new clients and colleagues across the world. Thank you.
Thank you, Mr. Chairman. Monsieur le Président du Conseil d'administration de Credit Suisse.
Chairman of the Board of Credit Suisse, that you have.
Ladies and gentlemen, today this is a historic moment. It's a sad and very challenging day for Credit Suisse, for Switzerland, and for the global financial markets. Since I took on this role about a year ago, it was clear that we could not continue like this. For 7 months now, Uli Körner has been in office as CEO. Of day one, he acted decisively and put new people in key positions. Together with his team, he worked on the cultural transformation as well as giving Credit Suisse a new direction. I have got the utmost respect for Uli Körner and his leadership team. Despite the fact that we managed to achieve many of the objectives we had, we did not have the time to conclude the project in a regular manner. The massive outflows of clients' deposits in October last year was a huge turndown, and we managed to catch ourselves and then started 2023 with a lot of enthusiasm and energy. The recent developments started by US banks hit us at the most inopportune moment. Once, like last year, we managed to overcome the loss of confidence in the markets, but not a second time this time. The downward spiral of the loss of confidence and the situation over the last few days made clear that the Credit Suisse cannot exist the way it is going forward. We are happy to have a solution of which I'm convinced that it will guarantee stability for our clients, our employees, the financial markets, and Switzerland as a whole. It is a very difficult and challenging situation. The decisions weren't easy. And in this current situation, there is no good solution, but the solution presented is the best possible under the current circumstances. Therefore, it is clear that now we need to look forward. And our clear focus is on our 50,000 employees, of which 17,000 in Switzerland. They work hard for our private clients and our wholesale and retail customers, and they will remain a stable partner for our clients going forward. UBS is an excellent and very strong bank. I know it very well. And together with CS, it will master the challenges with know-how, expertise, and with a good feeling for what is feasible. Our employees require stability, our clients need security, and Switzerland and the financial markets need calm and reliability. Ladies and gentlemen, let's look forward. The merger with UBS will give the required stability and security. The Administrative Council, the management, and all employees will give their entire energy to support this process in order to, together with the UBS, create a positive future.
Monsieur le Président de la Confédération, pour la conclusion.
Merci beaucoup, Madame la Conseillère fédérale, chers collègues, Mesdames et Messieurs. Le Credit Suisse est une banque qui, depuis sa création,
Suisse is a bank which, since its creation, has accompanied the economic development of our country. And I must tell you, the Federal Council is doing its utmost to deal with UBS taking over Credit Suisse. Of course, it's emotional. And of course, it's an emotional situation for the people working within the bank. So with this solution, the Federal Council, the National Bank, and FINMA, within the framework of their competencies, have done their utmost in order to be able to minimize the negative consequences for this situation for Switzerland, for its company, for its population, for its employees, and also with regard to the financial stability on a national level and on an international level. The Federal Council therefore salutes a solid solution, a solution which is between two private players and offers necessary guarantees to find this confidence again and ensure stability.
Solution between two private players, which offers the guarantees necessary to re-establish this confidence and ensure stability.
Monsieur le Président, nous pouvons passer à vos questions. Qui souhaite, Monsieur
Thank you very much. So now we come to the questions and session.
It was said that the Federal Council made decisions as early as Thursday in order to re-establish confidence. It was important, but it wasn't communicated. Why do you tell us this as late as today, and how was this to help confidence if it wasn't made public? Well, on Wednesday evening, it became clear that the Credit Suisse asked the Swiss National Bank for this liquidity bailout, and then we extended this bailout on Thursday and also decided on this backstop. We were convinced that it was important up until the weekend to make this liquidity available, to get through without any interruption, to then on Sunday at the latest be able to present a package. Now, if we had come on Thursday to say, oh, the Federal Council needs agreement of 50 million liquidity, and then we need an additional liquidity vis-à-vis the National Bank to the tune of 100 billion, then this would have undermined confidence and would have sown the seeds of insecurity in the national markets. And we discussed this together with the financial department, and this would have increased this insecurity. It would have been piecemeal, every day something else, 50 million, then 100 million. This would not have calmed down the situation. Now, had it been the case that the backstop had to be adjusted, i.e. the 100 billion of the National Bank had been used up already, then we would have to communicate very clear, because then it would have created security. But otherwise, we were of the view that this would have been counterproductive.
Mr. Foisy,
did I understand you correctly that the shareholders, the holders of bonds and the lenders, all of those, that they got away with it, that we saved the Saudis and their boss who on Friday night backstabbed the CS eventually and put the knife in?
Dazu möchte ich festhalten, dass wir den AT1
I would like to say that AT1 is part of the too big to fail regulation, which provides that the bonds, and we're not talking about small investors, we're talking about institutional and larger investors that are held by those that they would change and be converted into equity, and this was part of the too big to fail regulation, and this was triggered here, and therefore the investors also have a share, as you mentioned. Well, insolvency is a painful solution for those who hold those shares, but it is a legally correct solution.
Ja, Sie müssen weiter drücken. You have to push while you speak.
John O'Donnell from Reuters. One of the big lessons from the financial crisis was that there would be no more public bailouts of banks, and also that banks that were too big to fail wouldn't be created. And yet the decision today creates a bank which is even bigger than any bank which has ever existed before in Switzerland. And also the vast majority of the cost of this bailout is borne by the state and the Swiss taxpayer. Could you comment maybe on that, and also perhaps about the division of cost between private investors and the Swiss taxpayer?
Well, I don't know if the question goes to me. I mean, I have to state that very clearly. This is no bailout. This is a commercial solution because we have a takeover of UBS. Well, UBS is taking over Credit Suisse. So this is a commercial solution and not a bailout. We really wanted to avoid a bailout for different reasons. But I just maybe come back to the question of the too big to fail framework. I mean, the too big to fail framework couldn't have been applied here really, because usually, you know, this is applied to a bank that cannot meet its liabilities anymore. And here we had a problem of liquidity. So it is not typical at all, you know. And as I stated in my introduction, also the bankruptcy, you know, the bankruptcy of Credit Suisse would have had a collateral damage, a huge collateral damage on the Swiss financial market, also risk of contagion for UBS and other banks, and also internationally. So I was in contact with my colleagues from UK and USA. They are very grateful for this solution, because they really feared that there could be a bankruptcy of Credit Suisse with all the losses. And, you know, the taxpayer in this scenario has less risk. I mean, the bankruptcy would have been the highest risk, because the cost of the economy would have been huge, the Swiss economy. Then I would say that any other scenario that could have been imagined in the too big to fail scenario would also have had more costs than if you have a private partner, a bank, a solid bank that says we take over Credit Suisse. What we do is something that is, you know, the governor of the central bank pointed it out, is a instrument that is well known in other jurisdictions like the UK or the US, which is the PLB, which is a guarantee to the central bank. It's not money we give to Credit Suisse or UBS. So we find that this solution is the best solution, and I hope it will also be welcomed by other jurisdictions.
Could
you say whether dealing with the CS shares will be suspended tomorrow? And secondly, was it subject of the debate within the Federal Council to which degree the management of Credit Suisse is responsible, in part at least, for the loss of trust and confidence? Do we know whether trading will be suspended, was the question.
Das Management der Credit Suisse bleibt im Platz.
Management of Credit Suisse is going to remain in place. There will be a short transitional period for the weeks up to the closing. Afterwards, Credit Suisse will be a subsidiary of the UBS Group AG, and UBS Group AG is going to then appoint management and the board.
Second question as far as the General Counsel is concerned.
Und nein, wir haben nicht so viel Zeit genommen, einfach
wie
sagen wir das, die Rechnung tragen über die Vergangenheit. Aber es wird nicht gemacht. Wir
didn't spend too much time dwelling on the past. The work was very complex in order to have a solution in the short term for liquidity up to now and also for the next few days.
Oui, Madame.
Yes, madam.
Something I haven't quite understood, those 50 billion plus an additional 100 billion, or is it 100 billion in total with regard to liquidity and the backstop?
Die Herr Lehmann vorher erwähnt hat und die Credit Suisse bekannt gegeben hat, ist mittels traditionellem, normaler ELA, das heißt,
we have no more traditional ELA, i.e. emergency liquidity based on collateral. Over and above that, for Credit Suisse, we had a total sum of 50 plus 100, i.e. 150 billion as additional liquidity that we can draw on. 200 in total, yeah, if you add to this normal ELA, then 200 in total.
Mr. Burkhardt.
Da könne man keine Beschränkungen machen. Wir haben jetzt 200 Milliarden Garantie der Nationalbank.
200 billion, guarantee 9 billion by the federal government, and then unlimited bonus payments to the management of the bank. Is that not a little bit difficult to explain to the taxpayer? It's not about a bailout. These are instruments that are available internationally anyway. ELA, the liquidity support is something that any large bank can apply for at any time. In Switzerland, it's perhaps not quite as common, but Mr. Jordan can talk about this. It does happen abroad that a kind of bridging support is needed. This liquidity was increased also compared to other countries. The National Bank is quite restrictive in case of bottlenecks with regard to liquidity, or in UK or the United States, as it was intimated earlier, whatever it takes. The liquidity is just injected in order to stabilize the problem. What we give here is a guarantee vis-à-vis the National Bank and not vis-à-vis a bank, and therefore this is totally unrelated to this question. It would be different if the government had to bail out Credit Suisse. Then the regulation about pay and the dividends would have been applicable, but this is a guarantee vis-à-vis the National Bank. Article 10A of the banking law, a systemically relevant bank, if this gets a support by the government, then the Federal Council also requires additional measures for pay, because this is indirect national support. Well, liquidity support that a central bank makes available to a bank is not considered It's about liquidity support to cover bottlenecks with regard to market development. This cannot be compared with a recapitalization or buying back certain assets. It's liquidity support against the collateral, or in this case, against an insolvency privilege. This is not something that would normally be classified a bailout.
One last question.
Welche Folgen hat diese Fusion für die Arbeitsplätze in der Schweiz?
What repercussions does this merger have for jobs in Switzerland? How many jobs will be lost?
It's far too early for us to say on that at the moment. We're only just beginning the process of consolidation, assessing the impact. But obviously, we also see opportunities for people in this new combination. So we will update you when we have news.
Madame.
Merci. How can CS shareholders get something but bondholders of AT1 were wiped out?
Well, we needed, so the 81, the whole package has the intention to stabilize the financial system and to assure the stability of the financial system. And for this transition phase, we needed the capital, and the foreseen instrument in such a situation as in the too big to fail instrument is the 81. And so this is why we've chosen kind of to stick into this, to still stick to this too big to fail framework and to trigger only the 81.